Hey, everybody. Fascinating discussion today as we dive into the world of energy and AI infrastructure and crypto infrastructure with a true industry insider, CEO of Dynamix. Andrejka, how are you?
I'm doing well. Thanks for having me, Evan.
Well, thanks for being here. Really intrigued by your work and mission. Maybe introduce yourself, your background, and what's the big idea behind Dynamics these days?
So, Andrejka Bernatova, I'm the CEO and chairman of Dynamix Corporation. About 20 years under my belt across energy and infrastructure and power, and now recently the crypto space or digital asset space as well. Was a banker initially at firms like Credit Suisse and Morgan Stanley in New York and Houston. Investor at Blackstone in New York, and then at a sovereign wealth fund in Abu Dhabi called Mubadala. And really spent most of my life as an operator, as a CFO and CEO of a number of companies, and took companies public via IPOs and SPACs, a number of strategic exits. Really fun ride. And over the past about almost 5 years now, I've been running Dynamix platform. We have two pieces of the platform. One is a public piece, which is our SPACs. And then the other is our private piece, where we focus on a lot of energy and power related investments.
Wow, what a fantastic journey. And energy is top of mind to everyone in AI and infrastructure, data centers, crypto. How do you see the convergence of energy transition happening? Is it happening fast enough? What are the challenges and opportunities ahead, not just for operators, but for investors?
Yeah, I think you said it, Evan. I'm glad you used the word operator because what we are seeing as enormous opportunities from investor perspective is helping portfolio companies grow with sort of a heavy touch of operatorship. The space is obviously changing incredibly fast. Look, it's we've been here before, right? In terms of the energy needs and whether it's population growth or whether it's cloud, or now it's obviously AI. Whether it's the shale revolution, which completely changed the composition of the sort of the energy global energy status. People don't realize that, but by the way, the U.S. went from net importer to being the 25% of oil and gas production in the world today.
Wow.
Biggest producer of the world of both of those commodities. So, we are excited about the next growth, which is, driven by AI and new industrials and, some of the onshoring opportunities that we are seeing now as a consequence of the, tariff talks or changes. Green never comes fast enough. Our view ultimately is a little bit more evolutionary than revolutionary. We play on both sides, which we ultimately believe is one side. There's no renewable and fossil fuels. There's one energy. And if we want to continue essentially our AI addiction, which I fully confess I already am addicted, then we are going to need a lot of different sources of energy as fast as possible. We've used sort of the fossil fuels essentially pricing itself out, right? So you're going to have sort of the next 10 years or whatever time frame is, mid to longer time frame, having situations where we're drilling for more expensive oil and gas because inventory is getting more expensive, both in the US as well as internationally. And renewable pricing is going to come down, and scale is going to be higher and higher. And so essentially, I'm going to reach a point where it's not like renewables are going to take over. It's really oil and gas is actually going to price itself out. That is kind of the natural evolutionary piece that we view in this space. The interesting piece, what we've seen, I think, over the past 4 years on the renewable energy side. This is not the first time. I mean, renewable energy has its 2 months moment when there's a ton of capital coming into the space, and 5 years, nothing. And there's another 2 months that capital is coming into the space, and another 5 years, nothing. I think that's a really tough territory to live in. You need to have a sustained funding, structure. A lot of the times what folks don't realize is, energy is not created from nothing, right? You need, no matter what source of energy you are using, you need incredible amounts of capital, and you ultimately will need the mature private equity and infrastructure funds to come to play and fund these companies. And so what we saw in the last wave, and again, this is not the first time, of renewable funding is valuations, company valued at $1 billion where it should be really valued at $50 million. And, if you sort of go into that pricing mode and valuation mode that's based on large market potential versus actually fundamentals, bottoms up valuation, you're going to price yourself out of the market and kill yourself as a company, because nobody's going to fund you at those, no sort of later stage investors, large scale investor is going to fund you at those levels. So I know we unpacked a lot in this, but, we are believers in one energy. We are believers in ultimately oil and gas will price itself out. And we are believers in, renewable space needs to sort of have a realistic grounding in order to continue to fund itself and not be succumbed sort of to, the 2 months of excitement when capital is available every 5 years or so.
Oh, great insights. A lot to unpack there, including your Ether machine deal. Many of us know what Ethereum is as crypto investors or enthusiasts, but what is the Ether machine all about, and what was the big idea behind it?
Yeah, so we announced our Ether machine merger in mid-July, end of July. We've raised 2.2 billion of capital into that transaction. That's a combination both the founder Andrew Keys contributing 150,000 of Ether, one additional investor Jeff Burns funding another, contributing 150,000, and we actually did another PIPE and private private placement raise on top of that. So really happy with the outcome, and the company is slotted to close over the next few months. It is really a pure play Ethereum play with a team that has been doing this and managing and staking ETH over the past decade, with a team that's fully dedicated to the company in a structure that's very clean. So, Evan, there are multiple ways that you can go public, IPO, reverse mergers, or SPAC, and we partner with the Ether machine in a format where we can deliver a pure company that's not sort of doesn't have burden from the past, and it's fully focused on accumulating Ether, but staking, restaking, play a central role in DeFi, and really being a pure play for investors to express their view on Ether.
Fantastic. And, the critics would argue that, crypto in general is inherently unstable due to its energy use. But you're trying to redefine or reshape that narrative. Maybe talk about, the balance between energy consumption with the need for greener, more sustainable grids.
Yes, I think, I always tell this story, where we live in, in a neighborhood in Houston. It's a nice neighborhood. Every time I go for a run, I look up and I see a ton of wires. And, it reminds me of my time in Kathmandu. Every time I remember this is just like when I was, walking around Kathmandu 20 years ago. The grid will need a lot of investment. One, in terms of demand, from a demand perspective. So what we are looking at right now, Evan, is demand is coming from us, retail customers. Number one, we will probably continue to, consume the same or more amount of energy. Number two is obviously AI and data centers. And number three is, I would say Bitcoin, right? Ethereum is not as energy sensitive or demanding as Bitcoin is. And, the last industry is, onshoring, right? So having manufacturing facilities, et cetera, coming back on shore in the US. So you have basically four forces, and really three of them did not traditionally exist, right? And then you have traditional industries that have been around, right? So you had originally retail investors and traditional industries, and now you have three other demand centers essentially from new customer base. So demand growing dramatically. And if you think about the size, right now, data centers are consuming about 4% of US power, and it's going to be probably about 12% over the next few years, which is significant growth. So that's number one. Number two is resiliency component. If you live in California or you live in some parts of Texas or other parts of the country, you start realizing that your generator is as necessary as your AC or your heating, depending where you are. So I think resiliency is an enormous component. Obviously, as we add green energy, no matter which way you look at it, green energy is generally not as resilient as your traditional fossil fuel sources of power. So we are, Texas has been fighting with that, right? Texas is the biggest wind grid essentially, and that provides a lot of instability in the electricity and the power market. So as we add more, and then you'll have obviously nuclear at some point layering into it. So as you add more and the sources are more versatile, we'll have to make sure that one, we have enough machines in the ground, if you will, infrastructure that provides that resiliency, but also software to manage, utilities, to manage microgrids, and to manage the demands between the different demand centers, just like we just talked about.
Yeah, that's fascinating. All of these energy assets are being re-evaluated, reviewed. You've got fusion opportunities coming on stream, grid storage, new battery tech. Nuclear is getting a fresh look, even in the US. Of course, China is going gangbusters. And wave energy, in Ireland and other places. Of all those sources, what are you most excited about or optimistic about when it comes to powering blockchain infrastructure or these new AI data centers?
Yeah, it's a good question. So, I have my mom hat on. I have 3 kids, and of course, I want them to live in a clean environment. I think any of us want that. On the other side, I have my, Eastern European realistic hat on. And so what I'm most excited about is, near future, it's gas, right? So if you want to actually decarbonize in the fastest way, the best way to do it is to actually switch to gas, whether it's from diesel or coal. So, I always think about it. It's great to have these wonderful visions for what happens in 10 years. I'm really concerned about decarbonizing over the next 10 years. Again, gas is the best way to decarbonize over the next 10 years. I do think, again, solar, wind, batteries, nuclear, all those are going to be really important. I mean, one of the investments we made was in the largest residential solar business in Florida in 2024. And, that market will likely exist. It makes a lot of sense, but it just doesn't exist on its own. And so I think there needs to be a very serious push, which we are seeing now in the renewable space in terms of bringing costs down. But what I'm frankly most excited about is layering gas into wherever, it's possible over the next 5 to 10 years.
Great point. I think the word of the year is resilience, and certainly gas is a resilient technology when it comes to availability and all of these networks. I think whether it's telecom or energy grids or crypto networks have resiliency challenges, it seems, with cyber attacks, climate disruptions, geopolitical challenges in Europe right now. How, as the CEO, do you think about risk mitigation across all these areas, as well as resilience for your investors?
Well, I would say one interesting piece that we think about as investors is, pricing for the end customer, right? Whether it's retail or commercial customer, and how sort of risk influences that. And I think, the way we think about the next 5 years of, growth, and I know there are a lot of concerns about obviously power prices increasing, which I think is obviously a very real risk. On the other side, I compare it to fueling again our AI addiction. And you and I are one generation, Evan, and our kids is another generation. So if we are addicted, they're hyper addicted to stuff that's even much more energy inefficient than ChatGPT, right? And so I would say the important piece that we kind of play around is how much do we think that the end consumer will be willing to take from a price increase perspective, versus kind of the source of power. So, I'm not worried about it because I do think, that the usage of AI is going to be real across, from industries to, and, retail customers. But we have to be conscious about the fact that we will be subsidizing it. Prices are likely going to increase because our own usage of a technology component. So that's one thing that we do think about long and hard. Efficiency is always important. We are looking at some investments on the efficiency side. I remember when I lived in Abu Dhabi. This is now 15 years ago. Abu Dhabi continues to have very large scale efforts investing in renewable energy. And I remember walking one of the biggest conferences in Abu Dhabi in the world, actually, on renewables. And the biggest theme was energy efficiency, right? So we really like those phenomenons. You obviously see it already in Europe, right? Like, for example, you look at cars in Europe, you see hybrids. So you can go all the way to EV, or you can actually do hybrid. That's probably a little bit more, solvable, right? From an infrastructure perspective and just, time perspective, etc. So, houses, you look at the insulation in Europe, it's like a bunker, like the air doesn't move in and out. You go to any building in New York City and it's like a hurricane inside, on 300 days of the year, probably. It's just no insulation in buildings. So, those are some interesting opportunities as well. So I think between, our consumption of AI, but also, maybe becoming a little bit more efficient, learning some of those lessons from Europe and other places, and decarbonizing, via maybe some of the more realistic sources like gas and others. We feel that there's some exciting themes over the next few years. But obviously there is geopolitical risk. I'm from Czech Republic, so we are close to the Russia-Ukraine conflict there a little bit. And honestly, I haven't seen Europeans worried ever in my lifetime as much as they have been. And so I think that sort of energy sovereignty, not only on the country level, but also individual level, has been very real in Europe. You see a lot more solar panels and a lot more batteries, a lot more heat pumps after the conflict started. And we may see that, also transmitting into the other countries and US specifically.
Wow, amazing insights. I appreciate you coming here on the road and joining from a hotel room. What are you excited about over the next weeks and months? What's on your radar, your agenda at Dynamix?
We are excited about, the continued need for energy and power. It's, we always say, Evan, that the two sort of pillars of driving AI is, one is energy and the other is blockchain. And we happen to play in both of these territories. So a lot of exciting things. I would say we have to be very careful so we don't, swing too much in a overfunding direction. You want to make sure you are as balanced as you can, and make sure you partner with the right companies, the right management teams, and have very real business plans, not sort of grounded on some futuristic things that may never happen, but actually grounded in reality. So that, that really excites us. We've built real infrastructure over the past few decades, our team has. And so we feel very excited about, what's ahead, both on the private market side as well as public market side. And we are excited about, maybe teaching some of the, companies that are now sort of needing sources of power that they never needed before, about how it's structured from a commercial perspective, from, financial perspective, and enabling that next stage of growth with our positive experience, but also a lot of scars that we've had over the past 2 decades in the energy space.
Well, it's been a really informational discussion. Appreciate your insights and congratulations on all the success. Onwards and upwards.
Thank you, Evan. Thanks for having me.
Well, thanks for being here. And thanks everyone for listening and watching. And in addition to the podcast, check out our new TV show now on Fox Business and Bloomberg. Thanks so much.